All right, so market keeps on going higher. I think we're around the all-time high on the SPYs. Yeah, I mean, so we're within striking distance of the all-time high from back on August 8th. We got the 3-day weekend. We got the non-farm payroll, which pretty much the market doesn't react to. I think maybe one every 3 months or so now it reacts to it, once every 4 months. The number was weak, but pretty much the strength and weakness we've seen over the last few months is pretty much the same as the last year. So, you know, there's no upward pressure. The most interesting thing about it is there's no upward pressure on wages, despite us being, you know, between 4 and 4.5 in unemployment. It's weird. But this continues to be the trend of it not really have a big impact on the price action. Earnings season's pretty much over, but we get that drip of a few good names at the end before we get nothing. And so today, again, we got some good stuff. Let's start with, actually, before we do that, just quickly on the levels on the SPYs. You can watch 248 to see if it fails there. If it does, maybe we'll come back in and test 247.30. Remember, 247.30 is a pretty good level. It failed there yesterday morning, consolidated below it until we broke through at the end of the day yesterday. IWM, we burst through 139, which would have been a decent spot to fail. The good thing about these levels too is when it bursts through in the morning, you can watch on the retrace when it comes back down. And if it holds it, you know, you definitely don't want to be short. Kind of a risky long, I think, up here. On the daily, it looks like 140.50 is the next kind of real level. It's pretty clear to me. You can see when we topped out here, we came back up. We had trouble there the next day. We burst up. We closed below. You can see here we pulled back and touched it. 3 days here we failed at 140.50. Topped out here, pulled back here. So just looking at it over the prior June and July, it was an interesting inflection area. So we're at 140.15 right now. It seems like we could tag that 140.40, 140.50 today. I'd have some alerts up there, see if we fail. AMBA, they gave weak guidance. It is getting crushed. On the daily, I remember this was the one that went up with GoPro, right? Because they did the chips for them. So obviously they have a better business than GoPro because it didn't keep on going down to here. But something, so let's see off the lows, it bounced 35 to, it doubled off the lows. It's pretty good actually.
So that's on the radar. Snap is really interesting.
We're gapping below 48 here, which is where it's been supporting since the beginning of the year, last fall. Actually, not the beginning of the year. There's not much below that. I mean, I guess you can look at 45, but you know, this gap fill here is 43 from 2016. If it spikes right up on the open, the first area to look at is you want to be a little bit careful because the initial down move took it to 49. So I don't think it'll be strong today, but it could pop here on the open. And then if it fails there and then it starts to hold below $46 midday or whatever and it gets below there, you can play it as a trend trade. Reminder, I haven't said this in a while, most stocks don't have one trend all day. BBY from the other day is the exception, not the rule. Most stocks will go down in the morning, then bounce, or they'll go up in the morning and then pull back. We'll see that when we get to Sienna in a few minutes. That's why we look for spots for failure on both sides until a clear trend is established after the first hour and a half or so. The next one is Lulu. So Lulu had very solid numbers. The guidance was nothing impressive, I didn't think. We want to see where this is relative to the daily price range. So we know it got hammered a couple of years ago and it came back. It had a soft gap fill to 62. It was above there. It was looking pretty good. And since then, it started to see some selling. So 62 is actually pretty good. You can see here on the daily, it failed there for like a week before bursting through and then back below. And more recently, I guess 60.80 to 61 was kind of resistance. Let's zoom in on the pre-market in the after hours. So initial reaction went through 62. They sold it all the way back down to 59. We come in this morning, it's above 61. So this is still buyers in control. On the open, if it comes below 61 and you see it kind of below 60, 80 or so, fine to play for a quick flush down move on the open, and then we'll kind of see, are people really like these numbers and think that the guidance is just conservative because Lulu is actually being smart in terms of keeping expectations low. If you're running a company, it's always better as you report good numbers. Apple started this years ago. If you're reporting strong numbers, just give conservative guidance because ultimately price action is determined by expectations. And so if you keep on reporting good quarter after good quarter and keep expectations low, your stock tends to perform quite well. But obviously many people realize that, and so they'll try to read into the conservative guidance. And the way you know if they think the guidance is too conservative is the stock won't have that much of a pullback, will bottom somewhere above 60 and then close at or near 62 or higher, which would be extremely bullish. But happy to play it in both directions. Our starting range is the 62 long-term resistance, after hours high, just above that, and then down to 60. PANW, P-A-N-W. I haven't traded this much in the last few years. I just found, it does trade 1 million shares a day, but I've always found it to be difficult with the widespread. And you can kind of see just a lot of the craziness. So right now it's up $11 on guidance that nothing jumped out at me being particularly good. Some analysts said some nice things about it. And right now it is above its recent resistance on the daily, but still obviously this downtrend is operative. I would say this downtrend is operative until it gets back into the 150s probably. So what do I have for resistance here? So I got 144, then 148, so that's a big jump. So first thing I would do is look to see if it fails here on the open at 144. I would stay small in it, but it's a mover. Obviously, you can see how quickly it jumped $10 here. But if you are short a little bit here, you could very easily walk into a $3, $4 down move. But not a lot of risk from there. And then we'll see from there. Obviously, if it breaks above 44, I didn't really see much until 148. Okay, so Ciena. So Ciena, we shorted this on the pop right on the open yesterday. Basically, that pop right to the pre-market resistance came off pretty hard, and then I played based on the game plan. Our final support was 2150, so played it off of 2150 support. After it started to show support here on that next pullback, this is when I loaded up right here and started to go up. I was off the desk for this entire move, but just scaled out of it as it popped through 22. If we zoom in on the 5-minute, this will go to the point I was making a few minutes ago, which is it gapped down, so we looked to short the pop on the open, and then it came into longer-term support, and then it had a really nice bounce. It bounced $1. And what the great thing about the bounce was, it put in its morning low. It tested it, it was bought, it tested it again. And so your risk here at 2140 was no more than 10 cents. And your upside was back up to 22, and then even the morning, and a morning resistance, 22 and a quarter, or even the morning high. So that worked out obviously very well. Once it topped out, it's got back below 22.20. If you wanted to short it on a break below 22, that's a perfectly acceptable reversal trade. But downtrend morning, uptrend midday, downtrend afternoon. Now what you want to do is, since it didn't close near at the lows or at the highs, kind of just want to look to see if you can play it off of the ranges from yesterday. So 2160 to 2140 support, 22 to 2220 resistance, and then the morning high from yesterday, 2160-ish or so, 2170. DG. Shit, did I not save the game plan for you guys? The game plan should be in the real time now. And DG, right. So DG bought this right on the open on the flush into 71, immediately popped back up 72, sold a bunch to cover the risk. I got stopped out, I believe, in this first down move below 70.50 right here. It was not on the desk when it based there, but usually if I get stopped out once at a level, which I think it may support, once it starts to hold that level, I'll buy back. And in this case, it actually held there for a half an hour before reversing. So it's another example, just like Sienna. DG a little bit trickier in terms of a wider spread, so you got to give it a little bit more room. You can see right before it went up. This is another thing that's very common. You'll have buyers. The buyers will pull their bids, and then as soon as it pops back up, you get the beginning of a reversal. It's more common than you would imagine. You could actually write a script and maybe trade that. In fact, you could write a script to do it, so I have. It bounced $3. So an example of an intraday level forming and about 30 cents of risk there, $3 above. So looking at it for today, I'm not sure what all these weird prints are down here. I think somebody accidentally hit like a bid in the pre-market that they shouldn't have, and now they're paying offers up here. But looking at it, after the reversal, it was accumulated at 72.80, then at 72.50. I would be using, right on the open, I would be a buyer into the 71.60s, and then I'd watch to see if it got back above 72.50. That is all. I'm not sure. I think some guys are taking off for the long weekend today. Had a pretty interesting day, end of the month yesterday. One of the things you'll start to see in real time is we built OTC trading into our platform. I don't know how many of you guys trade OTC stocks or have access to them, but we just felt there were some pretty good opportunities there in the last year or so. Pretty big programming project building it into the platform. So now you'll start to see the guys take some OTC positions. And again, like when they're trading the low floats, these are riskier trades for more experienced traders. But if you're interested in learning those, you can kind of follow along as some of the top traders are taking positions in them in the month of September. As always, be patient and good luck.
Hope you enjoyed that video. You can actually watch that video if you're subscribed to our Trader 90 before the market even opens. What stocks are in play? What levels in those stocks are important? And how we might go about attacking that stock. That's Steve Spencer, 20-year veteran trader, laying it out there every morning before the market even opens. A really, really powerful tool to start your session off on the right foot. So right now we're offering a trial that you can take advantage of to access this meeting and other meetings throughout the day. We have a meeting at 11 a.m. Eastern where you can sit down with Mike Bellafiore and listen to him talk about what's going on during the morning session, what stocks were in play, what the best trade opportunities were, as well as maybe some things that we're looking at heading into the afternoon session. So I really encourage you to take advantage of that trial.